Hi everyone, my name is Fauzan. Welcome to another video on my channel. I hope my previous videos were useful. My last video I spoke about financial education and how you could start today and go ahead and procure large amounts of wealth over a period of time. As the name of the video suggests, in this video I'm going to be focusing on the factors or aspects I look into before I go ahead and invest in a particular share or before I buy a particular share, as to what factors that I consider. It will also give you an awareness as to what aspects you could consider in case if you're a beginner, you're new to the market and you want to go ahead and you know decide what type of companies to invest in. Now, how is the price determined? So there are various factors that come into play when a stock's value increases or decreases. It could be external news, it could be performance of the company, it could be the psychology behind people who are buying and trading on shares. So what I would do is say, normally if I'm going to choose a particular company and make an investment, certain aspect which I consider: one, first I look into which sector the company is from, because say sometimes I prefer sectors where if there is a company and if it is a monopoly or if it is a market leader, I know that company is relatively safe. There is always going to be demand for those products the company deals with, and the value of the share, there would also always be demand. Then I look at companies which are not regulated or restricted by certain organizations, like the government, for example. Say energy sector, electricity in India is regulated by the government. So even if I invest in an energy share or energy company, and there is a possibility that I cannot seek an uninterrupted type of growth, because there is a possibility the government could impose certain types of restrictions on them with regards to pricing, with regards to supply. So energy, railways, simple. So those are type of companies which I avoid. I prefer companies which have good future potential, like say companies like Tata Elxsi, which is more into futuristic aspects. That is a company which is really experiencing good growth. Moving forward into the factors itself, say I mentioned about government regulation. So we all know about the Indian Railways, IRCTC. They are also listed on the share market. But I personally would not invest on them, although they have a monopoly, because they have a loss-making firm. There is another company called Indian Railways Finance Corporation Limited, I believe. What they do is they basically procure the assets and lease them out to IRCTC. So that is a profit-making organization. Not many people are aware of this. So they have good assets, they have stable income because the railways are going to borrow from them. So rather than investing on IRCTC, you could invest in IRFC. You make good returns and good profits out of it. So moving forward into the fundamentals. So the first thing is I identify the sector, I identify what position they hold in that sector, market leaders or predominant share of the market. Then the second aspect is getting into the financial statements of the organization, the fundamentals as to performance basis. So yes, first thing which we all go is to see the sales growth percentage, the profit growth percentage, the stock CAGR, which is basically compounded annual growth rate. So as an investor, this is one of the most crucial aspects you need to look into, because there could be some companies which are not generating as much profit or as much sales, but if their stock price is consistently growing, say for the last 3 years, 5 years, 10 years, there is something where the market is holding it strong. So as an individual, rather than looking at sales, profit or ROE, ROCE, looking at the stock CAGR is one of the crucial aspects which I predominantly take into consideration, because if I'm making an investment, I want the value of my share to increase as much as possible. That is the main purpose of an investment. Then we move on to the financials, which is going to be, one is going to be ROE, which is return on equity. Another commonly used one is ROCE, return on capital employed. The definitions would be on the screen. In simple terms, basically what it means is the percentage in terms of financial performance, how efficiently they use the investor's investment, how efficiently they use the capital or any type of an additional investment they brought in, what's the most best financial performance they brought in. So ideal companies, they look at 15 to 20% as really good returns. What I do is I look at companies that give me more than 20%. The reason being is if I look at ROE, ROCE, stock CAGR, everything over 20%. Even in a year where the market is not favorable, it's still going to give me at least 15 to 20%. So looking at that on a long term, it's beneficial, and there are a lot of companies consistently over 10 years giving you over 20% returns on your investment. There is another ratio which is extremely crucial, which not many people analyze, and it's surprising why not many people consider that before investing in shares. So it's called the PEG ratio. We normally come across the PE ratio, but the PEG ratio, what it does is it gives you a better idea of whether an organization's share is overvalued or undervalued. Because say you would never want to invest in a product which costs 1 rupee by paying 2 rupees. Rather, if it is at 50 paisa, you would in fact go and invest. So it helps you identify with regards to a particular company's share whether I can go ahead and invest, because if it is undervalued, good. Once the market realizes it, it's going to go up. So PEG ratio, what it does better than a PE ratio is it also takes into consideration future financial performance. So I use that a lot. So ideally, a PEG ratio of anywhere between 0 to 1 states that the company is undervalued. You can definitely go in for an investment because the value is going to match up. And the best thing is always consider the other aspects also, which I mentioned: the sector, market share, what business the company is in, and then your ROCE, ROE, sales, profit, stock price, all that in combination. So once you've moved ahead from the profit and loss statement, the next crucial aspect is we move on to the balance sheet of the company, because you need to also assess the company's assets and liabilities in order to identify whether this company will survive or not. So two main aspects I look into are: one is cash reserves. Because say a company that is consistently growing its cash reserves and having a good amount of cash reserves is always safe. The reason being is, say we've had the pandemic, in case if a company's business lost, say consumer goods like automobile sector, so the sales have reduced, so the performance will have reduced. In that case, when a company has good cash reserves, what happens is there is less risk of it severely affecting the price or severely affecting the stability of the organization. It could rely on the reserves in order to go ahead and pass through the difficult phase. Another aspect is liabilities or borrowings. When you look at borrowings, you always need to see that a company that is at least reducing the borrowings over the years is a good symbol. But if a company's borrowings are increasing, say we come across companies like Yes Bank, we come across companies like Vodafone, what happens is the amount of borrowings is extremely high. So, it's financially not viable for them to survive for a longer term unless external help comes in. So what I do is I look at companies that are consistently increasing the cash reserve, and also companies that are consistently reducing the liabilities. Because once the liabilities are paid off, say they're not going to pay any more interest on that amount, it is going to contribute to value of the organization. So debt-free companies, are extremely something which attracts me as an investor. So, and that's it pretty much. Analyzing the overall total liabilities, total assets, the balance sheet, along with the profit and loss statement, along with the company's profile, would help you choose right stocks, which will enable you to make amazing investments by which you can grow your portfolio over the long term. What I'll do is, I know I've taken already a lot of time on this video. I would just give you a few examples of stocks that I have already invested in, which you could also consider if you like the attributes that it provides. So there was one company called Loris Labs. So what that company does is they hold over 100 patents with regards to something called API. I believe it is something with regards to the ingredients that they use for making different types of generic drugs. So they hold the patents. They are into the pharma sector, fast growing sector. It's going to be really, really sustainable. Then there's a company called Deepak Nitrates, where they deal with a variety of chemicals, and they are literally market leaders in a variety of different chemicals. So again, market leaders, strong fundamentals, good stock to invest in. And then if you look at another company which I can talk about is Dixon Technologies Limited. So it's a company which is India's largest manufacturer of LED TVs. So, companies like Samsung, companies like Xiaomi, Panasonic, TCL, all of them use products manufactured by Dixon. Move into lighting structures like Havells, Philips, all of them are also getting their products manufactured by Dixon Technologies. So, these are market leader companies in lighting or in LED TVs, in smartphones. And if there is a company that is, the largest producer in India and having these as their vendors, that's a company which is not going to fall. It's just going to be future based and keeping on rising. So these are just few of the 3 companies I've invested in. If you go do a research on all these 3 companies, the ROE, the ROCE is consistently increasing. The sales growth percentage, the profit growth percentage, your stock CAGR percentage over the last 3 years, 5 years, 10 years have been consistently over 20% and growing. So they tick all the parameters I want. They are in a sector where they are market leaders or monopoly. They are in a sector where, consistently performing, ticking all the profit and loss statement requirements, the balance sheet requirements. And they've been going up ever since I bought. Say, there's another company called CDSL, Central Depository Services Limited. Sorry if I made a mistake on that name. So I saw the fundamentals, brilliant fundamentals. What they do is also brilliant in their sector. I invested last week. On Friday, I bought a few shares at a very good price. It was close to its highest ever pricing, but still I believed in the company because fundamentals are brilliant, and it was undervalued when I looked into the PEG ratio. I invested it. Today is Wednesday when I'm recording this video. Yesterday, I think we had an increase of 15%. Today, we've had an increase of 4%. I've already had a 25% increase on my investment, and I expect it to keep on going further. And I'm planning of accumulating more shares of CDSL because certain companies, you see it, there is no way the company can fail because consistent performance, good history, good future, good financials, and good fundamentals. So in case if you're looking out for, investing in any shares, look into these factors because there's a very rare chance that if you invest in companies that tick all these factors, there's hardly going to be a chance for you to lose your money irrespective of what happens in the market. So I take into consideration all this, and good luck. You could also take into consideration all this while choosing your shares and stock and make a beneficial return over long-term investing. The next videos would be more focused on the companies as a whole rather than education. So I would choose, say, 3 to 5 different companies, walk you through the financials, give you an idea as to what you could come across over there, how to see what aspects, and basically share what companies I'm investing in or I've invested in, the reasons behind it. If you want to know what company to invest in, feel free to go ahead, opt in for that based on your research. Definitely, they will turn out to be multi-baggers in the future. Thank you everyone for staying till the end of the video. If you like the video, do like the video and click on the subscribe button. It would be very helpful. If you have any questions, any doubts, or if you want to have an idea as to your planning of investing in a particular company and you want to ask me whether it's a good investment or not, feel free to pop it in the comment section and I'll be happy to answer them. Thank you so much and have a lovely day. Stay positive. Bye-bye.